On June 17th, President Trump said this.
Also, we run out of reserves in about 4 weeks. You know, there are reserves all over the world, and we would really run out. And there'll be a time when you wouldn't be able to get it. And you want to see bedlam?
Well, time's up, and apparently we were supposed to believe the Strait of Hormuz reopens. The oil starts flowing, the fertilizer shows up, food prices calm down, and everybody goes home. Except right now, the world is dealing with something much more serious than an expensive gallon of gas. Because when a major energy choke point is disrupted, the first thing that breaks is not always the fuel pump. Sometimes it's the shipping contract, then the insurance market, then the fertilizer supply, then the food supply, and eventually the thing that breaks is trust. Trust in governments, trust in banks, trust in currencies, trust even in the idea that the system you were born into is going to be there tomorrow. And that's where the $1 million Bitcoin theory starts to enter the chat. Not as a prediction, as a warning. Because if Bitcoin reaches $1 million through gradual peaceful adoption, that's fantastic. But if Bitcoin reaches $1 million because the global monetary system is on fire, that's not a victory lap. That is civilization looking for a lifeboat. Hey, welcome back and buckle up. Today, we're connecting 3 things. 1, why an energy shock becomes a food problem. 2, why fertilizer and shipping matter more than most people realize. And 3, why this could create the exact environment where Bitcoin's max pain theory becomes real. But we're also going to steelman the bear case, because if you're thinking, Rustin, in a global energy crisis, isn't Bitcoin going straight to zero? That is not a completely stupid question. Bitcoin can absolutely sell off in a liquidity panic. I'm going to give it to you straight, the good, the bad, and the absolutely terrifying. Here we go.
I think hyperinflation in the rest of the world is a 4th shock, and then persistent inflation in the US is a 5th shock. So I think it's a perfect storm. And if you put all these events together, what do they signify? They signify the rational conclusion for any person thinking about this is, I'm not sure if I can trust my property. I don't know if I have property rights. I don't know if I can trust the bank. And if I'm politically at odds with the leader of my own country, I'm going to lose my property. And if I'm politically at odds with the owner of another country, I'm still going to lose my property. And when push comes to shove, the banks will freeze my assets and seize them. And I think that that is playing out in front of everybody in the world.
And today, that trusted banking system is being tested by an energy crisis that could reach far beyond the gas pump. Energy affects fertilizer, fertilizer affects food, food affects politics, and politics affects money. Here's the part that kind of makes this personal. You don't need to understand derivatives, you don't need to understand repo markets, you don't need to understand the plumbing of global dollar liquidity. You just need to understand a grocery receipt. And I think you and I both understand what happens when fuel gets more expensive. You understand when the same shopping cart costs $200 instead of $100 or $150, and somebody tells you inflation is moderating because the increase was slightly less violent than last month. Energy is not just something that comes out of a pump. Energy is embedded in transportation, refrigeration, mining, manufacturing, fertilizer, water, food. Remove energy from the equation and the modern economy starts looking less like a machine and more like a very expensive house of cards. And when the inputs disappear, everybody discovers the bricks were mostly accounting entries. Fugazi! The Strait of Hormuz is not some random line on a map. It connects the Persian Gulf with the Gulf of Oman and the Arabian Sea. In the first half of 2025, the EIA estimated that roughly 20.9 million barrels per day of petroleum and other liquids moved through the strait. That is 1/5 of the world's total oil supply moving through a narrow maritime choke point. So when people say the strait's only a few miles wide, that is exactly the problem. The entire global economy can be exposed to a bottleneck that fits inside a camera frame. And you don't even need the waterway to be completely closed for the damage to begin. You only need ships to slow down. You only need insurers to raise premiums. You only need captains to decide that a route is no longer worth the risk. Markets don't wait until the world runs out of oil. They only need to believe the next shipment may not arrive. That's when you get hoarding. That's when you get rationing. That's when governments start making emergency decisions under pressure. And that's when every financial model built on cheap, reliable energy starts coughing up blood. And we do not want to be their huckleberry. As of July 22, marine traffic reported only 15 confirmed Strait of Hormuz transits, up from 9 the day before, but still nowhere near normal traffic levels. So yes, ships are moving, but not completely closed is not the same thing as fully functioning. Now here's where things get a little uncomfortable. Modern agriculture is not just sunlight and soil. It depends on diesel. It depends on natural gas. It depends on fertilizer. It depends on machinery, transport, refrigeration, irrigation, and global trade. Nitrogen fertilizer is particularly important because ammonia production relies heavily on natural gas as both feedstock and fuel. So when energy becomes scarce or expensive, fertilizer becomes scarce or expensive. And when fertilizer becomes scarce or expensive, farmers have a problem. The WTO reports that fertilizer shipments through the Strait of Hormuz effectively came to a standstill after the conflict began. It also reports that urea prices rose from roughly 400 per metric ton to more than 850 before falling back toward 453 in June. And that's not a Bitcoin chart. That is the input cost of growing food, and the supply is concentrated. The WTO estimates that Gulf economies accounted for approximately 24.8% of global nitrogenous fertilizer exports and 11.4% of phosphatic fertilizer exports. So the issue is not just can we find fertilizer somewhere else, the issue is whether we can find enough of it, move it cheaply enough, and get it to farmers before the next planting cycle. The delay creates a dangerous illusion. You can have the energy shock today, the fertilizer disruption this season, and the real agricultural consequences months later. People look around and say, nothing happened. Then the next planting cycle arrives. And suddenly the problem is no longer a headline about a shipping lane. It's a shortage at the grocery store. It's political chaos. It's a fight over who gets access to food first. And this can arguably all be attributed to central planning and central control. Now, before we jump into Bitcoin, we need to separate analysis from internet mythology. We're not auditioning for a bunker podcast, but here is the important distinction. You don't need to prove that one global mastermind exists in order to recognize that centralized systems can be fragile. You don't need to prove that every event was planned to understand that governments make mistakes, institutions protect themselves. Politicians delay bad news, corporations optimize for quarterly earnings, and complicated systems fail in ways that nobody fully controls. Maybe the crisis was engineered. Maybe it is geopolitical escalation, bad incentives, and incompetent decision-making. Maybe it's a mixture of all three. For Bitcoin, the motive matters less than the consequence. If ordinary people lose trust in institutions, what do they move into?
Say to people, I used to say, hey, buy some Bitcoin, it's fun, it's interesting, might be kind of an interesting thing to hold on to. Now I say, you better hold Bitcoin. If you want to protect your family, you want to protect your company, you want to protect your country, you better have some Bitcoin. In fact, it's irresponsible now for a company to operate and have a big treasury and not have some portion of that, 5, 10, 15% in Bitcoin. Because, well, when Silicon Valley Bank went out of business, we almost saw the domino effect. We almost lost all the banks right there. And if that ever happens, you, as leaders of your businesses, are going to be responsible for payroll for at least 2, maybe 4 weeks. And if you're in Europe, you're responsible for payroll for years. And so you better have some Bitcoin on your balance sheet so you can make those payroll and keep your business afloat. If you run a family, if you manage a family's money, you ought to have about 6 months worth of Bitcoin, because if the dollars that you own are suddenly worthless, what are you going to do? And if you're a government, and if there is hyperinflation in your government, and the currency goes the way the old Argentinian peso or the Nigerian naira went, and you don't hold any Bitcoin, your government coffers are worthless. So it's gone from, telling people, hey, this is a really interesting opportunity, to telling people, you should be scared if you don't own Bitcoin. You should be very, very worried.
This is where max pain theory becomes relevant. The casual interpretation is that Bitcoin's max pain means an 80 to 90% crash, a brutal bear market. Leverage gets wiped out, everybody suffers. Eventually, the strongest holders remain. But there is another interpretation. Max pain could mean Bitcoin reprices so violently upward that normal people are effectively priced out of the asset. This is also referred to as the trademark Parman. But they're not priced out because Bitcoin failed. It would be because the demand for monetary escape became overwhelming. Picture the sequence. First, the crisis hits. Risk assets sell off. Bitcoin sells off too because hedge funds need liquidity and people sell whatever they can sell. Companies sell treasury assets. Funds sell liquid positions. The headlines come in. Bitcoin failed as a safe haven. The bald talking heads celebrate. Peter Schiff posts 12 times before breakfast. Then the second phase begins. The energy crisis becomes inflation. The inflation becomes political instability. The political instability becomes capital controls, restrictions, emergency money creation, and a collapse in confidence. And now people are no longer asking, can Bitcoin beat the S&P 500 this year? They're asking, can I get money out of the banking system? Can I protect my savings from currency debasement? Can I send value across a border? Can I own something that can't be printed by emergency decree? That's a completely different demand curve. It is not casino demand, it is survival demand. And survival demand is much less price sensitive. So could this crisis theoretically push Bitcoin toward $1 million? Not because the crisis magically creates wealth. A crisis can destroy wealth. The mechanism and reason is that it can destroy confidence in competing monetary assets faster than it destroys confidence in Bitcoin. That is a relative repricing. If the dollar loses purchasing power, Bitcoin can rise in dollar terms without being more useful in absolute terms. If bonds lose credibility, Bitcoin can rise against bonds. If banks become less trusted, self-custody Bitcoin can become more attractive. If capital controls spread, a permissionless settlement network becomes more valuable. Bitcoin does not need to replace every currency tomorrow. It only needs to become the preferred exit for a small percentage of global savings during a period of institutional panic. The world has trillions of dollars stored in things people assume are safe because they've always been treated as safe. If even a fraction of that capital begins searching for an asset with, no central issuer, a transparent supply schedule, global liquidity, self-custody, and no requirement to trust a bank, the repricing can be violent. That's the $1 million thesis. No, Bitcoin is magic, not everyone gets rich. It's a thesis about what happens when trust becomes scarce. And trust is the most underpriced asset on the planet. We're about to bring it home today. But before we do, look at our likes!
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Then let me ask you, who controls your Bitcoin? Because if it's on an exchange, in IBIT, in MicroStrategy, that's not your Bitcoin. That's Coinbase's. That's Larry Fink's. That's Michael Saylor's. You did the exact thing we just spent 10 minutes roasting the government for doing. You handed your sovereignty to an institution and told yourself to trust the number. The Bitcoin way fixes that. Real self-custody, proper hardware, your own node, full on-chain verification, the privacy stack, the whole thing. Plan B residency. They walk you through it so you actually own your keys instead of an IOU. Book your free 30-minute consultation today. Scan the QR on the screen or hit the link in the show notes. 30 minutes, that's the difference between owning Bitcoin and owning a paper promise. Okay, let's be fair. Let's steelman the bear case. Bear point one, in the first stage of a global crisis, Bitcoin can behave like a risk asset. People sell what they own to cover expenses. Companies sell treasury assets. Funds sell liquid positions. Bitcoin does not get some special exemption from a margin call. Bear point two, if governments respond with restrictions, surveillance, or emergency controls, Bitcoin access could become a lot more difficult for the average person. Self-custody is powerful, but self-custody does not eliminate the need for food, energy, internet access, or an on-ramp. Point three, a famine is not automatically bullish. If people are choosing between buying Bitcoin and buying dinner, well, dinner wins. Obviously, it's not a meme. This is the real world. So if somebody tells you that a global humanitarian disaster is a guarantee to make Bitcoin go up immediately, they are confusing monetary theory with human suffering. Bitcoin can be structurally strengthened by a crisis while still being violently sold during said crisis. Both things can be true. Bull point one, the current system is built on trust in intermediaries. Trust the bank, trust the government, trust the currency, trust the central bank to preserve your purchasing power, trust the shipping lane to remain open, trust the food supply to remain cheap, trust the emergency response. When enough of those assumptions break simultaneously, the demand for alternative becomes non-linear. Bull point two, Bitcoin is uniquely portable. You can hold it without a bank. You can verify the monetary policy. You can move it across borders. You can store it in a way that is not dependent on any single institution. That does not make Bitcoin a replacement for food, water, or energy. It makes Bitcoin a potential escape valve for monetary confiscation and currency debasement. Bull point three, every crisis teaches the public a lesson. The financial crisis taught people that banks could fail. The what have you in 2020 taught people that supply chains could break. And the media, sketchy. The inflation wave taught people that currency debasement was not theoretical. A prolonged energy and food crisis could teach people something even more important. The system you assumed was permanent is actually conditional. That lesson is extremely dangerous for a centralized monetary order, because once people understand that permanence was an illusion, they start looking for something they can verify themselves. Here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, 0 customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top up so you never get liquidated by a wick. 0 prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to Ledn.io. So, could this crisis send Bitcoin to 1 million? Yes, it's possible, but the route matters. A peaceful repricing toward 1 million would mean Bitcoin absorbed global monetary demand. A crisis-driven repricing toward 1 million would mean the rest of the world lost trust faster than Bitcoin lost relevance. That is not a victory condition I think we want to celebrate. I don't want billions of people starving so Bitcoin can print a number. I don't want governments collapsing so Bitcoin can post victory memes. The better outcome is that people recognize the weaknesses of the system before the weaknesses become catastrophic. Bitcoin is not a substitute for competent governance. It's not a replacement for energy production. It's not farming policy. It's not a desalination plant, but it is an exit option. And when the exit options are scarce, the option with a fixed supply becomes very, very valuable. This is not Bitcoin failing. This is the global trust premium being repriced. So here's the takeaway. Do not blindly believe every apocalyptic claim. Do not blindly trust every institutional reassurance. Follow the mechanism. Energy affects fertilizer. Fertilizer affects food. Food affects politics. Politics affects money. And when people lose faith in the institutions managing money, they search for sovereignty. That's why this crisis could send Bitcoin to 1 million, and that's precisely why it's terrifying. When you set up your Bitcoin wallet, did you actually plan for real life? Because phones get lost. People forget things, stuff breaks, and eventually, whether you like thinking about it or not, your Bitcoin may need to be passed on to someone else. That's exactly why BitKey makes so much sense. It's like the idiot-proof hardware wallet. BitKey is a self-custody Bitcoin wallet designed around the fact that life happens. There's no seed phrase sitting on a piece of paper that can disappear forever, and there's no single point of failure where one mistake means your Bitcoin is just gone. The new BitKey device even has a touchscreen, so when you're approving something important, you can actually verify what's happening before you approve it. Transactions, recoveries, address changes. You can see it yourself instead of blindly trusting that everything is okay. Recovery and inheritance are built in. Lose your phone, you have a recovery path. Want to make sure your family can access your Bitcoin someday? You can set that up too. No extra subscription, no separate inheritance service, no insanely complicated process that requires a computer science degree and a treasure map. It's just a much more practical way to hold Bitcoin for the long term. Get your BitKey today and use promo code SUNDAY to get 10% off. That's it. Get your BitKey. Do it. Do it today. Hey, if this breakdown helped you understand the connection between energy, food, trust, and Bitcoin, smash that like button. Hit subscribe, give us a pamp, and let us know down below. Do you think Bitcoin's max pain is going to be a crash or a violent repricing upwards? Love you guys. Catch you next time. Peace.
If you prefer to go down with the ship, you.